Ladies and gentlemen, welcome back. In this comprehensive guide, we delve into the intricacies of the Employee Retention Tax Credit, also known as ERTC, ERC. Now, I understand there's a flood of information out there, some legitimate and unfortunately, some not. Today, we're here to dispel the confusion surrounding this valuable tax credit. We'll explore how it works, who qualifies, and the nitty-gritty details you need to know. So, buckle up as we navigate the landscape of the Employee Retention Tax Credit. First and foremost, let's unravel the mechanics of the Employee Retention Tax Credit. This credit essentially reimburses a percentage of the wages you paid to your employees during the challenging times of the pandemic. Now, if you've just realized that you qualify for this credit, fear not. You can file amended returns to claim the credit, more on that later. During the COVID era, advances of this credit were offered to aid small business owners in retaining their employees. Now, as I elaborate on the credit, I'll focus on the specifics for small businesses, but fret not, I'll cover the broader spectrum as well. The dynamics of the credit underwent changes in 2020 and 2021 due to the evolving circumstances of the pandemic. In 2020, the credit could be claimed for quarters 2, 3, and 4, amounting to 50% of the wages paid per employee, with a cap of $10,000 in wages. This translated to a maximum credit of $5,000 per employee. Now, fast forward to 2021, the credit saw a significant boost. The percentage increased from 50 to 70 of the wages, with the annual cap transformed into a quarterly limit of $10,000. This effectively meant that in 2021, the maximum credit per employee was $7,000 per quarter, resulting in a potential total of $21,000 or less depending on your business. Hence, you might have come across claims of getting $26,000 per employee through the ERC, $5,000 for 2020 and $21,000 for 2021. It's essential to note that in 2021, the credit is applicable for all 4 quarters, but the 4th quarter is exclusive to recovery startup businesses, a category we'll delve into later. Now, let's address a common query. Is ERC the same as ERTC? Yes, they are indeed the same. One is the shorthand version, Employee Retention Credit, ERC, and the other the more extended Employee Retention Tax Credit, ERTC. Both refer to the identical credit aimed at businesses and nonprofits that have W-2 employees. Moving on to the crucial question of eligibility. Who qualifies for the Employee Retention Tax Credit? All types of businesses and nonprofits can potentially qualify, provided they have W-2 employees. However, the rules differ based on the size of the business. Small businesses, defined as those with 100 full-time employees or less in 2020 and 500 or fewer in 2021, enjoy a more straightforward qualification process. For smaller entities, the wages paid to workers automatically qualify for the credit. On the flip side, larger businesses, those with over 100 employees in 2020 or over 500 in 2021, face a more stringent criterion. Only the wages paid to employees while not working qualify for the credit. Determining your eligibility involves assessing each quarter. You must ascertain whether your business was fully or partially shut down due to a government order at any time during the quarter. If so, you qualify for that quarter. Alternatively, if your business experienced a more than 50% decrease in gross receipts for any quarter in 2020 or a 20% decrease in 2021 compared to the corresponding quarter in 2019 or the immediate preceding quarter, you also qualify for that period. This meticulous evaluation ensures that the credit is allocated to those genuinely impacted by the challenges posed by the pandemic. Now, let's shine a spotlight on a unique category: recovery startup businesses, RSBs. If your business commenced operations after February 15, 2020, you fall into this classification. Primarily applicable to quarters 3 and 4 of 2021, RSBs must maintain an average gross receipts total of less than $1 million per year. The credit calculation mirrors that of other businesses in 2021 to 70% of employee wages up to $10,000 per quarter per employee. However, the credit for RSBs is capped at $50,000 for quarters 3 and 4. Notably, RSBs are exempt from the shutdown or decreased sales tests applicable to other businesses. Now, a pertinent question arises: Can you still apply for the Employee Retention Credit in 2022, 2023, or 2024? The process doesn't involve a separate application. Instead, you claim the credit on your payroll tax forms, specifically the Form 941s. It's crucial to note that the credit is only applicable for specific quarters 2020 quarters 2, 3, and 4, and all 4 quarters of 2021, with the 4th quarter reserved for RSBS. If you've recently realized that you qualify, you can file an amended return for the respective quarter within 3 years from the date you filed your original payroll tax form or the date you should have filed it. Timely action is advised to ensure you capitalize on this opportunity. Now, can any business claim the Employee Retention Credit? Absolutely. The credit extends its reach to various business structures, including sole proprietors, LLCs, corporations, partnerships, and nonprofits. However, a word of caution for those with ownership in multiple businesses: the IRS imposes aggregation rules. If you own 50% or more of multiple businesses, or if you, along with 4 others or less, own 80% or more of multiple businesses, you must treat them as one for the purpose of calculating the credit. This might influence the total number of employees and the calculation of decreased gross receipts. The determination of full-time employees plays a pivotal role in the eligibility criteria. Full-time employees are defined as those who worked 30 hours or more per week or 130 hours or more per month. To calculate the average full-time employees, you add the number for each month and divide the total by 12. It's important to note that for ERC, there's no need to consider full-time employee equivalence, a concept relevant to other tax rules. This distinction is significant as it impacts whether your business falls into the category of a large or small employer, with small employers having a more advantageous position due to all wages qualifying for the credit. Addressing a common misconception: is there a requirement for a minimum number of employees to claim the Employee Retention Credit? No, there is no such threshold. However, some entities, colloquially known as ERC mills, have surfaced, claiming that businesses must have at least 5 employees to qualify. These entities often seek maximum returns for themselves, as they charge a percentage fee based on the refund amount. We'll delve deeper into these entities in subsequent questions. Now, a question for those considering a DIY approach: can you apply for the ERC yourself? Indeed, if you've been handling your Form 941 filings, you can include the credit on these forms. For those utilizing software or payroll services, engaging with the professionals who regularly handle these forms for you is advisable. Platforms like Gusto, for instance, offer robust support and can assist you in amending the relevant forms. I must mention here that I have researched payroll processing companies extensively, and Gusto stands out as a reliable option. You can find an affiliate link in the description if you choose to explore their services. Moreover, stay tuned to the end of this video, and I'll guide you on how to access my assistance in navigating the ERC process. Another critical consideration: how long does it take to receive the ERC refund? As per recent trends, the processing time for amended payroll tax forms, where the credit is claimed, has been approximately 9 months. Patience is key as you await the reimbursement. Now, let's address a common inquiry: can business owners claim the retention credit? If by owner, you mean an individual with an S Corp or C Corp, it's essential to note that the owner, if actively working in the business, is required to be paid similarly to an employee. However, the nuances of this question may warrant a more in-depth exploration, but in summary, the answer is no. The rationale behind this is rooted in the credit's purpose: to incentivize businesses to retain and compensate their employees during challenging times. On to a pivotal question: how do you receive the Employee Retention Credit? The process involves filing the Form 941 for payroll taxes and claiming the credit against the Social Security and Medicare taxes owed by the employer. This credit is refundable, meaning it can exceed the original amount paid in payroll taxes. It's a nuanced but crucial aspect of the credit's mechanics. Now, does the ERC tax credit result in taxable income? The answer is no. The credit itself is not considered taxable income. However, it does impact your income tax in a nuanced way, leading us to the next question: how does the Employee Retention Credit affect income tax? The credit contributes to an increase in your income tax. This occurs because you deduct your payroll costs on your business tax return. Since you cannot deduct amounts received back through the ERC or similar programs, amending your business tax return becomes necessary. This adjustment aligns your payroll costs with the amounts received through the credit. While this may lead to a nominal increase in income tax, the overall benefit from the credit outweighs the impact. A vital question arises amidst the prevalence of ERC mills. Is the ERC a legitimate endeavor? And how can you avoid scams? The IRS has coined the term ERC mills for companies that exploit the credit for their gain. These entities often file incorrect tax returns, aiming to maximize your refund while charging a percentage fee. It's crucial to be vigilant as the taxpayer, as you bear the responsibility for any inaccuracies found during an IRS audit. The risks include potential interest and penalties accruing from the time of the audit. Therefore, exercising caution and avoiding such entities is advised. As a testament to the gravity of the situation, I must share that I was approached by a company offering substantial compensation for promoting their services. However, I declined, as their practices raised ethical concerns. Always prioritize credibility and accuracy when navigating the ERC landscape. Finally, let's explore what constitutes ERC qualified wages. Remember, the credit is based on a percentage of the wages paid to employees. Qualified wages per employee are capped at $10,000 per year in 2020 and $10,000 per employee per quarter in 2021. These wages encompass the compensation for the work performed. Additionally, any amounts paid for health insurance for employees can be included. However, it's imperative to exclude wages used for other payroll-based credits or programs reimbursing you for paid wages. This includes wages paid for the Qualified Paid Sick and Family Leave Credit or PPP, which leads us to the final question. Can you claim the ERC if you received a PPP loan? And how does PPP affect ERC? Initially, participating in both programs was prohibited. However, this changed in December 2020, with the enactment of the Taxpayer Certainty and Disaster Tax Relief Act. Now, you can claim the ERC even if you obtained a PPP loan. The caveat is that you cannot include qualified wages for the ERC that were also used for the PPP loan. This distinction ensures that the same wages are not counted twice across different relief programs. In conclusion, navigating the employee retention tax credit requires careful consideration of the intricacies involved. It's a powerful tool for businesses to recover a percentage of wages paid during challenging times. If you find yourself grappling with questions or uncertainties regarding the ERC, I'm here to assist. As you continue on your journey, consider subscribing to stay updated with valuable insights. Remember, knowledge empowers, and I'm here to empower you. Until next time, stay informed, stay vigilant, and thrive in your endeavors. Thank you for joining me on this deep dive into the Employee Retention Tax Credit.